I'm Ben with the BTC Sessions, and this is your bullish bit brought to you by Bitrefill.com, your one-stop shop for living on a Bitcoin standard. Sign up and grab gift cards for eSIMs, gaming, e-commerce, your travel needs, food, and much more, and you can buy them all with Bitcoin and Lightning. Sign up today and use code BTC Sessions 10 for some special perks.
The BlackRock ETF application is a big deal. I mean, they're evil, and they'll probably use it to manipulate the underlying price. But the fact of the matter is that, this is one of the largest, if not the largest, asset manager in the United States, run by a guy who 3 years ago was talking about how Bitcoin was a network for money laundering. They're now embracing it, and not necessarily for all the reasons we see it as being something that's going to make the world a better place. They're doing it because they think they can make money on it. But that's okay. It does add credibility, and there are a lot of assets out there, trillions literally of assets out there that will be coming to Bitcoin but haven't because of a lack of regulation or a lack of endorsement or a lack of belief that it's a safe space for a professional money manager to operate in. And when BlackRock is opening up an ETF in the area, it becomes more of a safe space. So related to that, the kind of the macro, dials that I look at that show me what's going on. I mean, so the U.S. fiscal condition continues to get worse. We've seen a 20% decline in tax revenues in the last quarter. And in turn, we've seen fiscal expenses increase by about 11%. So we're going to run a deficit this year of somewhere between $2.2 and $2.8 trillion, depending on what fiscal year you use or when you end the year. The dollar has been extremely weak in the last 2 weeks. It's just broken through 100. It was at 114 6 months ago, a year ago. U.S. one-year Treasury yield has just made a one-year all-time high. And what these all are to me is their continued signs of rivets popping. And the biggest rivet that popped was the failure of Silicon Valley Bank in March. And, my firm and those of us who are kind of macro investment gurus, we all kind of recognize that what's going on here is the government's in a position where they must inflate in order to get out from underneath this debt burden. And yet, inflation is running so hot, and they've had so many complaints about inflation that they're trying to tighten. And they're kind of in an inflate or die choice. And this is what happens in sovereign debt crises. Generally, it's a third world country, not the world's reserve currency. And as a result, it's becoming more and more obvious that the Fed is going to have to pivot, and they're going to have to resume printing money, and they're going to have to resume growing the credit markets, or else we're going to have the Great Depression, which I think they fear that even more than they fear inflation. And the inflation numbers have given them a little bit of cover. The headline rate came down to 3%, which was lower than expected. So I can easily see how the narrative is going to move to, well, look, inflation was 9%. We've got it down to 3. It's on its way to 2. We're good. We can start cutting rates. Maybe we can get rid of this QT. Maybe we can go back to QE, etc. So in my view, things are going to start turning in our direction monetarily. And related to this, I'll just add one more point. So we just went through one of the tightest rate hiking cycles ever in the history of the world. The only person who did it similar to this was Volcker, and that was in the 80s. It was 40 years ago. And in that environment, Bitcoin obviously took a big hit from 68 down to 15, partly driven by FTX. But year to date, 2023, Bitcoin is the best performing asset in the world, up 100%. And by the way, gold is up 8% this year, not nearly as much as Bitcoin. But the point is, in this kind of a rate hiking cycle in the past, gold would have been down significantly. These two sound money assets are looking through the bullshit that the Fed is spewing and realizing no matter what they say they want to do, they are going to have to print. They just have absolutely no choice, because ultimately they will not let the system fall apart. I think everyone will be shocked when someday the narrative changed, and just like you said, inflation was transitory and then it wasn't. Well, right now he's fighting inflation. He's got it all under control. He's going to bring it down to 2%. He's going to land this airplane. Well, wait until the airplane crashes into the runway and, everything is going tits up quickly, including the bond market, which is what I'm watching most carefully. And, they're going to reverse course. And when that happens, we're going to see Bitcoin go through 100,000 very quickly. We're going to see gold go through 3,000 very quickly. And the Fed's credibility is going to be further damaged. And so whether it happens in 3 months or 9 months, it's somewhere in that window, in my estimation. We're about to catch one hell of a ride.